A very good afternoon, everyone, and welcome to our September webinar, Finding Future Growth Stocks in a Time of Turmoil. Today's speakers, we've got Greg Canavan. He is a managing editor at the Daily Reckoning. Greg is also the author of Crisis and Opportunity. And the second presenter we have today is none other than a co-founder of Skaffold and Skaffold's general manager. He's Chris Batchelor. He's our chartered financial analyst. So we'll get straight into it, gentlemen. Over the last 12 months, we have had some trends or some general events. The media has talked about the market crushing. We've had some horror shocks and warnings and a bit of a bias. I'll start off with you, Chris. If you can just generally walk us through what events happened during the year.
So, Shepard, getting on to what you were saying about iron ore price has indeed fallen considerably over the last year or so. It fell from its peak of around $140 to a low of $40 in July, and it's since rebounded a bit to about $57. Last year, steel consumption in China actually fell. That's the first time that's happened in the last 30 years. And whilst that's happening, supply is continuing to increase. All of that means that the big producers of iron ore, Rio, BHP and Fortescue, have been hard hit. Also, of course, the small producers are being hit even harder, and some of them are barely viable at these levels, the likes of Atlas Iron and Mount Gibson. There's considerable collateral damage to other companies as well, those that service this mining sector. Thanks, Shepard.
All right, Chris, look, very quickly, let's move on to the next trend that happened. Let's talk about the oil prices. What effect have those had on the market?
Yeah, sure, Shepard. What we've seen again with oil in a similar vein to iron ore is that the price has halved. It's gone from around $100 to $50 or thereabouts over the last 12 months. And just this week, Goldman Sachs have released a report saying that oil could fall as low as $20. Now, that's a worst case scenario, but nevertheless, it's worth bearing in mind that we haven't necessarily hit the bottom. Now, what that means, of course, is that any business that's listed on the ASX and impacted by oil is going to be impacted significantly, and particularly the big oil producers, and again the smaller oil producers are getting hit even harder. And then there's a flow-on effect with all of these resource companies. They make up a considerable part of the Australian economy, and there's not only those companies themselves, but a whole lot of companies that service them, what we often refer to as the resource servicing companies. And they're being impacted significantly as the producers find their margins being squeezed. They have less money available to invest in projects, so construction firms and the like are getting impacted. And it can even have a flow-on effect to the broader economy. Of course, with oil, though, as opposed to iron ore, there are a number of businesses that have oil as an input, and so for those businesses, a falling oil price is indeed a good thing.
Awesome. Hey, Chris, I would like to switch over all the way up to Europe. Now, we've known or heard of some people from up in Greece that were down in Australia for holiday when the Greece meltdown happened. How does that affect us, and how close are we to it?
Well, really, Shepard, all the turmoil in Greece, it's devastating for the Greeks, and indeed any company that's highly exposed to Greece. But the reality is that aside from some short-term effects on sentiment, there's actually not much of a direct impact on the ASX and ASX stocks. What we can sometimes see, though, is volatility creates fear, and fear can create opportunities where stocks get sold off that really aren't going to be impacted by events in Greece in the long term, but people reacting to that sell off these stocks, and that can present an opportunity for those that have the stomach to get in there. Great businesses are those that can weather the storms, and usually this comes down to the specifics of the business rather than global events.
That is awesome. Look, now I'd like to bring in Greg, who's signing in from Melbourne. Greg, good afternoon.
G'day, Shepard. How are we?
Not too bad. Hey, Greg, the fourth trend I just wanted to cover today is the Chinese stock market. How close are we to that?
The Chinese stock market is an entity unto itself, but I guess looking at it in the context of how it affects Australia, you've got to look at how it, I guess, has worked in with the bigger picture of what's happening in China. So China started to slow down probably back in 2011, had a massive credit boom post 2008 when it was under a lot of pressure from the slowdown in the West. So it generated a massive stimulus program. It caused a huge boom in iron ore prices, commodity prices in general. It was very good for Australia, but its growth started to slow down from 2011. So pretty much from that time, China has been attempting to rebalance, stimulate, slow down, stimulate, rebalance its economy without going back into a boom type phase. And they've been very hit and miss with that strategy, and they inflated a big property bubble, and when that started to slow down, they tried to put their stimulus in towards the stock market, which created another bubble there, and now that is coming undone. The effect is not so much directly related to Australia, rather than the bigger picture slowdown in the Chinese economy, which, when Chris spoke before about the iron ore prices peaked in 2011, they've been falling ever since, and that is obviously directly related to China. So the effect on the Aussie economy isn't so much coming from the Chinese stock market as coming from the Chinese economy itself. And look, we're going to see for another number of years China's attempt to restructure and rebalance its economy away from very commodity intensive fixed asset investment growth more towards a consumption-based society, and that's not going to be without its problems.
Okay, thanks, Greg. Now, look, very quickly, this morning I woke up to some news about Thursday being the day that we hear about the interest rates in the US, which will be our Friday morning. Just briefly, the rising interest rates, how worried or concerned should we be?
No, the market's making a massive big deal of this, but personally, I don't think it's a huge issue. We've seen the market adjust over the past 12 to 18 months from the day that Ben Bernanke stopped quantitative easing, which I think was in 2013 at some point. So this has been a long time coming. Whether it happens tomorrow or overnight or not, I think is beside the point. It's probably going to happen at some point in the next few months. And look, markets do adjust to these moves, and whether that means we've had the most of the adjustment now, or whether there's a little bit more of an adjustment to go, but I don't think it's as big an issue as the markets or the commentary is making it out to be now. Sure, it's the first interest rate rise in nearly 10 years in the US, which gives you an indication of how much stimulus has been through the US and the global economy. But look, I think we should be able to manage a 25 basis point rise without too many problems.
If you have any questions, feel free to give me a call on 1300 Skaffold, or just send me an email at team@Skaffold.
Investing in shares can be rewarding when you do your research, but it can also take up a lot of your time. There's so much information out there. How do you quickly sort through the companies worth investing in and those to steer clear of? Skaffold is my research tool of choice. It tracks and reports on all ASX listed companies, plus thousands of global stocks daily, helping me decide which stocks to buy and sell. I can quickly filter through the reports to get the information I need. The rating system is like a set of traffic lights for the stock market. Green is good, orange is caution, and red is don't go any further. Skaffold's top stock choices have been highlighted for their outstanding performance by Money Magazine. With Skaffold doing the work for me, I have the confidence to make investment decisions without having to spend hours sifting through financial data. Now you can take control of your time and your portfolio. Why not take Skaffold for a test drive today?